Hi, Simon. Good morning. Thanks very much for being with us today. Could you start by telling us a little bit about your background in the online marketplaces space?
Good morning, Ed. Thanks very much for the chance to have a chat. I've been in the online marketplaces space for about 22 years now. It goes back to 2000 or so, where I did the deal for News Corp to buy the REA Group, or realestate.com.au was at that point in time. I ended up being CEO for 8 years, had fun in building that business up to about $1 billion market cap. Since then, I've been investing in maybe 30 to 40 different online marketplaces, mostly in the real estate segment. I've been chairman of ASX listed companies, including everything from the iProperty Group, Matula Group, and I'm currently chairman of the PropTech Group based out of Australia. So long, extensive experience in the industry. And the last thing that we've done over the last sort of 10 years or so is created what was called Property Portal Watch. We ran conferences around the world. I think we did about 25 or so of them over 10 years.
Okay, perfect. And zooming in specifically on the investments that you've made, firstly, could you maybe give us one or two examples, maybe some more recent examples of companies that you've invested in?
Sure. So the type of company I like investing in is one with potential high growth and good exit opportunities. So I'm going to mention three. The first one, which we've exited from recently, is Viva Real. I invested in that 10 years ago, worked very closely with Brian and the team over the intervening period. That eventually got merged with Zap and then got sold to OLX. So that's a good example of one where I've invested in and sort of cashed out over time. And then more recently, I've invested in a bunch of small businesses. For example, Fuzwaz out of Thailand, which is focusing on execution in the real estate transaction. Also Al Cubo in Brazil, which is also focusing on getting into the transaction space. So lots of different investments in lots of different online classifieds and online marketplace type businesses.
Okay, so let's look at it from the other point of view. Let's look at it from the company point of view. So let's say that I am an up and coming classifieds business. What is it? Why would I want to firstly seek out foreign investment, and why would I perhaps want to seek out CAV Investment Group in particular?
Yeah, so well, clearly accessing funds to accelerate growth is what every small business does, right? As long as they're onto something good, they want to accelerate, they want to experiment, and hopefully crack the code and become the next unicorn. So, the question is, how do you do that? And to do that, you need to have access to not only money, but also knowledge and experience. So, and I've done, I would say, 8 investments in the last 6 months. And all of those investments, it's not about the cash that I put in. It's around how can I help the management team to accelerate their growth. So I do everything from strategy sessions, talking about, is the strategy right, doing introductions to other businesses that look like them or other players in the market, giving them advice and guidance on micro details around things like sales approach, branding, marketing, and through to macro, helping them raise capital through my network. So getting someone who is a sophisticated investor on board and really working with them, not only just for their money, but for the other assets that they bring, is a way in which you can accelerate growth of your business.
Okay, that's something I want to talk about actually. So I've spoken to a few people in this series who are, let's say, institutional investors with a background in the industry. And something that I've noticed since starting to analyze these online marketplace businesses is just how much it seems to be homogenous to a certain degree, in that what tends to work in country A can actually work in country B. And there seem to be sort of 4 or 5 elements where if you get them all working together, you seem to have a successful business. Now, from an outside point of view, it seems like the industry does lend itself to these institutional investors with a background in the industry. Firstly, how unique do you think, or firstly, do you agree with that? And secondly, do you think it's maybe unique as an industry in that regard?
So there are elements that are unique and elements that are generic. So if you take a real estate online marketplace, the things that are generic are marketing, driving of eyeballs through an SEM campaign or good SEO, things are, for example, running a sales team, etc. It doesn't matter if you're a cars, jobs, homes type website, or even an online marketplace, just a general player. The things that become more unique in the market are, how do you deal with real estate agents? How do you participate in the real estate transaction? That's a more unique type of skills. Now, is it applicable from country to country? And the answer is, at the macro level, yes. The process of buying and selling a house is fundamentally the same everywhere. You go to someone who wants to sell their house, you market it, you drive awareness, you create leads. The leads are either sent to the agent or you're actually managing them yourself. You're then trying to get the buyer and the seller to match on a price, and then there's the closure of the transaction. That's fundamentally the same. It's the subtleties of what happens in the market. Are you dealing with higher commission rates? Do you have like the US and MLS type system that you have to operate with? Are you in some other countries where you've got different sort of rules around escrow or handling of cash? There's maybe more for sale by owners in markets and so on. They're the subtleties that lend the underlying process to work from country to country, but it tends to be local players that accelerate and do the best in each market.
Okay, but I take what you're saying, but do you think it's an industry that perhaps lends itself more so than others to investors who have kind of been there and done that? It doesn't seem to me, at least for some of these smaller companies, that they're attracting, let's say, the traditional venture capital in the same volume as perhaps in other industries. It seems to me there's a lot of investors who are, like yourself, sort of somebody who is a private investor or an investor who's not necessarily a professional investor, who seems to be behind some of these companies. Would that be fair to say?
I think it's a little bit, for me, it's a bit chicken and egg, right? Because I have the experience, I'm attracting the opportunities, and therefore you have this sort of self-fulfilling cycle. When I look at a number of the recent investments that I've done, and I tend to be at that Series A, angel, not seed funding, not very early, but when they've actually got some traction. That's when you're starting to see some financial investors coming on board. And as you get good momentum and good traction and scale, that's when you get far more of the more generalist investors coming on board. So I think what's really behind this is where you are in your life cycle. If you're still a piece of paper, then clearly you want someone who's been there and done that for advice or guidance, and no venture capitalist is going to really invest in that piece of paper. If you've done some things and you've demonstrated some traction, you still want to accelerate because you've created your MVP, and now you want to accelerate. That's where you still need investors like myself who can help accelerate and help point you in the right direction and hopefully save you some time. We don't have all the answers, but we can probably give you some ideas of what not to do as much as what to do. But when you're then starting to accelerate growth and starting to get tens of millions of revenue and so on, that's when the external financial type investors do come on board. So the answer is, at early stage, you're absolutely right. It does lend itself more to the experienced, been there, done that type investor. But I think as you get scale and you build confidence, and it's really about acceleration of what you know how to do, that's when I think the more financial investors can come on board and really accelerate growth, because they're investing, not millions, but we're tens or even hundreds of millions.
Okay. It's a classic question, but I'm asking everybody. What is it that you specifically as an investor really look for in the market? And where I'm going with this is our, not phrase, but the thing that we talk about quite a lot at online marketplaces is this journey towards the transaction. As an investor, are you specifically looking at businesses which either are dealing in transactions already or have a very clear path to the transaction? Or is it maybe more agnostic in that sense, and you just look at the market and the people behind it?
So probably three main things I look for. One is the quality of the team or whoever's behind it, running day-to-day operations. Do they get it? Can they articulate their business clearly? Have they got a track record? Have they demonstrated, creation of this MVP, a market viable product? Have they built relationships within their local market and so on? Is it someone that I feel like I can have a conversation with, pass the beer test, so to speak? I think that's the first thing, because if you don't do that, then it doesn't matter if the idea is fantastic. It's just not going to work from my perspective. Because and the reason behind that is many of these relatively early stage entrepreneurs don't know what they don't know, if that makes sense. And as such, it's those blind spots that can sometimes run you off the road. So, all I'm trying to do is shine some light on those blind spots just to help, make sure mistakes aren't made. That's the first thing. The second thing I look for is the market, all the basics. Is the market attractive? Is there an opportunity? Are there any macroeconomic issues? So for example, investing in Myanmar at the moment is not probably the easiest thing to do. Having an investment there, right? So it's that's something that you couldn't have planned for, or perhaps even India at the moment with COVID, etc. They've got a lot of other issues to deal with at the moment, and that therefore can dampen the capacity of the market to actually operate. So they're the macroeconomic issues. So understanding them, and then it's the more the microeconomic issues. Do they have a good business plan? Do they have a good way to approach the market? Are they targeting in on a specific problem that needs to be solved? And is it and what I like is the businesses that don't try to change the underlying process. Don't get me to buy real estate a different way. Don't get me to market, real estate fundamentally. Don't get me to do something fundamentally different, because that's very hard to change behavior. What's easy to do is make that behavior far more efficient and effective. So if you think about why sort of realestate.com.au in Australia, or a Domain, or a Rightmove, and so on did very well, is because they didn't change the behavior on how you buy or sell real estate. What they did was they just made it much easier to market it. That's all they did. And that's where they accelerate. So that's the second point. And the third thing that's quite important is, does the business, and because I like coming in at a sort of a Series A level, do they have a sort of a robust existing shareholder base? Okay. Have they, do they have some people on board? Because I don't want everyone to look at me and say, hey, you're doing it all, right? Because these businesses say they may need $1 million or $2 million or $10 million, but they always need more to accelerate. And you don't want to be the only guy that's get tapped on the shoulder to fund that. So you need to make sure that there's a strong shareholder base that's supporting a strong leadership team while they execute a strong, robust business plan into a market that has upside opportunity. There's no use selling houses in a market where the average price of selling a house is $50,000 and the commission rate is 1% to 2%, right? And there are markets that look like that, right? Great. So every time you sell a house, you may have the most amazing technology, the commission check's going to be $500. Yet you go to somewhere like the US and your commission check could be $50,000. Well, which one do you want to go after? The 500 or the 50? Well, as an investor, you want to have the market where there's the upside.
Okay, so talking about that, you mentioned two countries before. You mentioned obviously Myanmar is a very difficult place to invest in at the moment. India also for other reasons. Where both, let's say maybe geographically and in terms of potential business models, do you think the biggest opportunities for investors lie in the online marketplaces industry?
So I look at it through two different ways. One is, I like markets like Western Europe, US, Canada, or Australia, where the market has the capacity to pay real rates. So if you're working with a real estate agent and they're going to buy a CRM system, they're not going to pay $10 or $20 a month. They're going to pay $200, $300, $500 a month. So at the PropTech Group, they're the sort of markets that, for example, we're looking into. The second thing I like is when markets aren't working, where they're disrupted. So take Southeast Asia, for example, Latin America. The real estate markets are just stuffed, right? They don't work efficiently. They don't work effectively. Yes, they work, but not as well as they could. So a player coming in like a Quinto Andar or a Loft in Brazil, for example, or what Fazwaz is doing in Thailand is fundamentally making a highly fragmented, highly disorganized industry far more efficient and effective. And that's where you can get a decent market position from what's happening. So I think they're the two types of markets I like to look at.
Okay. Final question from me is one that I've asked everyone on this series. What do you think the next 12 to 18 months look like in the world of investment in online classifieds companies? Is it the case that maybe we'll see investment money maybe leaving traditional 1.0 classifieds operators? Do you think that there'll be more of these sort of Silicon Valley VC funds popping up in funding rounds? How do you see it?
Okay, so you have to look at the macroeconomic. COVID is not going away. We're going to have to live with COVID for probably the rest of our lives, okay, in some way, shape, or form. What does that mean? It means that behaviors are being changed around the world. And we've already seen it. We're already, Amazon's gone through the roof, just as an example, right? So dealing remotely, we'll take here for buying a car or buying a house, is going to become far more prevalent. So that's the first point. That therefore means the people who will, or the companies that will do very well over time, will be those that are making that transaction, whether it's buying a car, buying a house, or buying any other product, as smooth and as fast and as efficient as possible. Okay. If I'm currently sitting here in the US, if I want to buy basically anything and have it delivered to where I am in this apartment, Amazon, it can be even same day delivery. It is so efficient and so effective. Okay, and it's all designed to make it, the transaction as smooth as possible. The same has to be done in real estate and cars. We're getting there. So money is going to be coming into those companies that are making the move. So if the realestate.com.au's of the world or the Rightmoves of the world start moving into the transaction, buying up companies that are making the transaction far more efficient and effective, that's where the money will go. It's about effectiveness of transactions, because the transaction is where you're going to make the money. Here in the US, 6% commission for the sale of a house. If you're looking at $1 million house, that's 60 grand. That is being split between two people. Well, why can't a portal get into it? Why does Zillow go after the money? Why does not go after the money? Because that's where the real value is. It's not in the advertising dollar. So that's where the money will go. It'll follow those who are getting in the transaction space, which is why I think my last 8 or 10 investments have been companies that are trying to get into the transaction space and try to make that whole transaction process super efficient and super effective.
Nice one. Well, thanks very much for talking to me today, Simon. I look forward to, hopefully in the not too distant future, seeing you at a Property Portal Watch event and maybe passing the beer test. Who knows?
Okay. Thanks, Ed. You'll pass,
Cheers.
don't worry.